Hi, I'm Dan Danford, and this is another episode of Money Made Easy for dadsdivorce.com. Great question came to us this week over our website. My insurance agent just showed me a new long-term care policy. I worry about nursing home expenses, but I'm not sure I need this type of coverage. What do you think? Great question, and I can't answer it specifically because I don't know enough about your circumstances. Generally speaking, most people who recommend long-term care coverage recommend that there's a window between ages maybe 55 and 65 where it makes the most sense to buy. Before age 55, you'll be paying the premiums way too long for when the coverage might kick in. After age 65, the premiums are very expensive. So if you think you need long-term care coverage, the time to look for it is between the ages of, say, 55 and 65. Now, a couple of things I think are important. Number one is you need to kind of assess your family needs. Okay? This is one of those things that a lot of people worry about, but truthfully, not everybody needs the coverage. What other assets do you have? What other insurance do you have? I mean, is it likely that going into a nursing home would deplete your resources? And that's what people worry about. If it's not likely that it'll deplete your resources or impair your spouse's ability to get care, then I wouldn't worry about it. Just don't worry about getting the insurance. But if you're concerned about that and you have the ability to buy the policy, you can afford the premiums and all, then it might make sense. And a couple other things that I suggest to people, especially in today's environment, is to keep investing and insurance separate. Okay? There are a lot of products out there today that are kind of hybrid products. What I've been seeing is a combination of a life insurance policy and an annuity, and then it's marketed as some kind of long-term care coverage. In truth, that is not long-term care coverage. A long-term care policy is actually an insurance policy that will pay for your expenses if you enter a nursing home or if you require long-term care. What this is, this combination is kind of a hybrid product, and what it does is you're buying an insurance policy that will pay a death benefit on your death, and you have this annuity that continues to grow until your death. So the combination of those two things, what the insurance company does is they allow you to draw against that if you need it for nursing home expenses, okay? That's kind of problematic to me, truthfully. This annuity, you probably could do better investing it yourself someplace else. That's one thing. The other thing is when they advance you benefits that you're going to get in your death policy, from a life insurance policy, that's money that you're going to collect anyway. I mean, you aren't going to collect it, but your beneficiaries are going to collect it. So when they call it a long-term benefit, they're really kind of mislabeling it. What they're saying is, we're going to let you get money that you would have been entitled to anyway earlier if you need it, okay? Now, I'm not saying it won't work for everybody. I'm just saying be careful about it because it's not really a long-term care policy even though they call it that. And it just goes back to one of the things that I've seen over the years, and I really believe, and I am a licensed insurance agent in the state of Missouri. I've never sold a policy, but being a licensed agent allows me to comment on different products and things. Generally speaking, if you need insurance, you should buy an insurance policy, okay? The more complicated it is, the more they fold different kinds of investments into it, the more they, add different kinds of riders and things like that, the harder it becomes for you to understand it, probably the worse deal it is for you anyway. I'm just killer on taking things and breaking them down to their simplest form and saying, now, if I bought the separate parts, how much cheaper would it be? So just be very careful when buying insurance products and things, whether it's long-term care or whether it's life or whether it's an annuity. Just be real careful that you understand what you're buying and that you're looking at all the different aspects of that purchase. and deal with reputable people. You know, I think it's very unlikely that you'll get what you really need if you start dealing with somebody you've never met before and they came to you and suggested you buy something. In all likelihood, what they're selling you will not be as good a deal as what you call somebody and seek. Is just the way the world works, and especially with complex products like insurance products. So I hope that opens your eyes a little bit on the subject of long-term care insurance. Like I said, just be cautious in buying these products. Make sure you get what you need and only buy what you need. That's it for another episode of Money Made Easy for Dad's Divorce. Thank you.